Hello everyone, welcome back to my channel. Don't forget to like, comment, share, and subscribe. Federal Reserve Chair Jerome Powell said the central bank's efforts to curb inflation will require a sustained period of below-trend growth. The will that will lead to pain for households and business. There are These are the unfortunate cause of reducing inflation, Powell said during a speech at the Fed's annual meeting in Jackson Hole. Woo, but a failure to restore price stability would mean for greater point. Last year, Fed officials insist that inflation will be temporary, but high prices have persisted for longer than they expected, something that has forced policymakers to act aggressively to cool the economy. Powell has said the central bank is determined to tame inflation even at the risk of recession. He said Friday that the economy continues to show strong underlying momentum, but the labor market is currently out of balance, with demand for workers substantially exceeding the supply of available workers. Powell's message was that the Fed will continue to fight inflation to get it back to its targeted 2% and will keep at it until the job is done. There is debate on just how far the Fed will go at the next policy meeting in September. The futures market indicates a 58% change of another 70 percentage points increase, which will be the third such increase in a row. There's a 41% change the Fed markets a smaller 5-point increase. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook, Powell told the audience Friday. There is some evidence inflation is leveling off, especially as energy prices have come down in recent weeks. The housing market is also cooling as rising interest rates and high sales price push will be buyer to the sidelines for now. But as earnings reports from retailers showed, consumers feeling pressured by rising food prices are putting off purchase of other items such as clothing and electronics. A key set of data came out early Friday. The fifth preferred measure of inflation, the core personal consumption expenditures index, was up 1% in July from 6% in June and was up 48% for the year through July, but less than analysts expected. It was also far lower than June's readings, an indication inflation is cooling. The core number excludes for food and energy price, which tend to be more volatile, while the lower inflation readings for July are welcome. A single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down, Powell said in Friday. In current circumstances, with inflation running for above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to stop or pause, he said. The Nasdaq led declines among the three U.S. benchmarks, registering its worst daily performance since June 16, weighted by high-growth technology stocks which stumbled after rallying the previous day in anticipation of Powell's scheduled speech to the Jackson Hole Central Banking Conference in Wyoming. The U.S. economy will need monetary policy for some time before inflation is under control, Powell said at the event. That means slower growth, a weaker job market, and some pain for households and business, he added. Okay, guys, maybe that's all from me. Thanks for watching, and don't forget to like, comment, share, and subscribe. See you.